The CNBC app. Global market news in one place. Customizable sections and personalized alerts. Stocks tracking, interactive charts and market insights all in your hands. Stay connected. Stay informed. Download the CNBC app today.
A very warm welcome to Squawk. I think it's our busiest day of programming with top C-suite guests since Davos as well. So just bear with us. It's going to be a 3-hour roller coaster with Karen Cho and myself, Steve Sedgwick, and these are your headlines. Nvidia shares a dip in extended trade. Only a bit though, despite an earnings beat, as the chipmaker's guidance disappoints some of the street's more lofty expectations. Now, speaking to this very channel, the CEO, Jensen Huang, brushes off concerns around low-cost rivals.
DeepSeek was fantastic. It was fantastic because it open sourced the reasoning model that's absolutely world-class.
Elsewhere, President Trump hits the EU with a fresh tariff threat, pledging a 25% levy on imports and lashing out once again against the bloc.
The European Union was formed in order to screw the United States. That's the purpose of it. And they've done a good job of it, but now I'm president.
Bitcoin attempts to regain ground as a global rout sees some $800 billion wiped off global cryptocurrency markets in recent weeks. UK Prime Minister Keir Starmer touches down in Washington for his first meeting with President Trump, with Ukraine's future high on the agenda. It's often billed as a macro event as we talk about a single name stock, and it was Nvidia Day yesterday. Nvidia gave the market yet another top and bottom line earnings beat. But its numbers, will they be enough to spur the mammoth market moves investors have come to expect? The stock is down around 1.5% in extended trade, off gains of more than 3.6% before the bell, after revenue came in at a record $39.3 billion and earnings came in at 89 cents a share. But it's that key forward guidance that dominates investors' attention. The firm expects revenues around $43 billion in the first quarter. That's more than $1 billion higher than LSEG estimates, but around $5 billion below what some analysts had predicted. That figure also only represents a 65% boost on the year versus a more than 260% jump in the first quarter of 2024. I think you're getting the message here about just how high the bar has been set. Now, if accurate, that would be the latest in a series of slowing revenue growth figures. It's not just revenue growth that's losing momentum. Developing its flagship Blackwell chip could eat into Nvidia's margins over the next few months. The company said it expects its first quarter margin to come in at 71%. That is lower than analysts had penciled in and down from 73% this quarter. However, CFO Colette Kress told investors on the call that she expects that figure to return to the mid-70s later in the year as the company builds out its Blackwell infrastructure. CEO Jensen Huang says demand for the technology is amazing, coming in at $11 billion for the quarter, with the firm expecting a significant ramp for sales this quarter.
Feelings about Blackwell is better today than it was at last quarter. And the reason for that is because we, of course, ramped up into production. We exceeded our target, and the teams did an amazing job. As you recall, we had a hiccup in our design flaw in Blackwell that we found early on last quarter or quarter before that. And we recovered tremendously well, and I'm very proud of the team for that. And so for those reasons, I feel pretty great from an execution perspective.
Huang also gave his thoughts on the impact of DeepSeek's AI development.
DeepSeek was fantastic. It was fantastic because it open sourced the reasoning model that's absolutely world-class. Just about every AI developer in the world today has either incorporated R1 using, it's called distillation, distilled from R1, or using techniques that have been open sourced out of R1 so that their models could be a lot more capable. Across the world, AI has become better as a result of the last several months.
So an underwhelming after-hours performance for Nvidia, and this is how the Asian supply chain is reacting today. You can see there is downbeat trade across on some of the major trades from SK Hynix to Advantest, and Hon Hai Precision also tracking weaker. Meantime, let's get out to Melissa Otto, who's head of TMT Research, S&P Global Visible Alpha. Melissa, it was such a headline act yesterday. The market had very big expectations, and they were understandably nervous around DeepSeek, what that is doing to compute demand, but also around Microsoft with the news that it's rolling back on some of its data center leases at a time where the market still thinks there's a ramp up around data centers. What did you make of the Nvidia numbers at first blush?
They were okay. For the quarter, they were a bit better than expected, but the guidance, okay on the top line, but a little bit light on the gross margin. Net, I think, probably okay, but nothing to write home about.
To me, if you look at what the big hyperscalers are doing, it seems as though they still have the foot on the pedal in terms of accelerating this build out of AI. The one pushback was that Microsoft news yesterday around the data centers. It still feels like it's early days, so there's nothing in the numbers to suggest that the hyperscalers are not going to spend to the same extent. If we just get a hint of that, when could it materialize and what would the impact be on Nvidia, Melissa?
Yeah, based on Visible Alpha consensus, CapEx for the mega cap tech stocks, so the big six, is expected to be $330 billion in aggregate. That's a significant increase from last fiscal year. So that, is probably going to go mainly to NVIDIA GPUs and to some extent Blackwell. The question right now, I think, in the market is that there is a disconnect between the amount of compute infrastructure and transitioning to accelerated computing that's actually happening at the infrastructure level that is very significant compared to the level of sales and productivity gains that companies are actually netting. In fact, many AI applications are not even getting into production. I recently saw data that compared AI application adoption from 2023 to the end of 2024 actually decreased. So we have this disconnect in the market. It's like, okay, wow, you're spending all this money and there's all this great infrastructure coming online. It's going to, make everything potentially cheaper, but when do we actually see the rubber hit the road and see sales and productivity gains in companies?
Yeah, Melissa, I saw a quote yesterday from one expert like yourself saying it's spray and pray. Let's just chuck the money at it and basically put your hands together and hope for the best. Let me ask you, I think the question which a lot of people are asking is, do they buy, sell or hold Nvidia at the moment? To my mind, compared with some technology stocks, it doesn't look extraordinary value, but I'm not an owner of the stock. I don't trade these stocks. It trades at 28 times forward as well. For a company that just had a 78% increase in its sales, that doesn't look too stretched to me.
One of the data points that I'm keeping a close eye on is the upward revisions. Just to put this into perspective, the upward revisions from 2023 to this fiscal year increased by about $250 billion for fiscal year 2026 and 2027, which seems astonishing to me. I mean, that's just very significant upward revisions to an expectation over a pretty short amount of time. So the question that I'm asking myself is, how significant is the total addressable market? And in fact, can we see yet another $100 to $200 billion in upward revisions? And if we can, then in fact, there's probably a bull case to be made. But if we can't, that's a different story.
And well put, Melissa. What does it mean? How important are Nvidia's numbers, the picks and shovels of AI at the moment, the biggest pick and shovel in town? for the likes and the destiny of the other players out there who are doing the large language models? It seems there's an enormous disconnect from one that's actually have huge revenues and making large amounts of money to companies that have limited revenues and aren't making large amounts of money but are trading on ridiculous valuations. Can you just talk to us about the connect there?
Yeah, it's a tricky question. I mean, one thing I can certainly say is that developing AI applications it's very complex because for most of the AI development process, it's a very technological heavy standardized process with the stack. And then once you get to the top of the stack, it really requires the tech teams to import a lot of specific domain and persona knowledge, which means, so if you're a financial services company, you're developing a financial services AI application, you have to bring the analyst in or whatever financial services professional in to sit with the engineers and the dev teams to make sure that they're building this and training the model in the way that the output is going to actually align to what the user is expecting. If not, then it's probably not going to be very useful and it may hallucinate or deliver results that really aren't very valuable. And that piece of it is very challenging for organizations. And that's part of the reason that it's been so time consuming.
Right. Melissa, let me ask you very quickly around the strategy from Jensen Huang yesterday, because I think the market was trying to work out how quickly are we moving from training chips to inferencing and what role does Nvidia play in that journey. But he reset the narrative talking about a couple of big trends in AI, saying there is the agency AI, physical AI and sovereign AI. That's where they will focus their attention. 3 different parts. And for those who don't know what this means, agency AI, the more automated processes here, no human intervention. Physical, much what we're talking about with industry, and sovereign AI, of course, how states manage their own data. So just what does this mean in terms of how investors think about these 3 areas and whether Nvidia can dominate in all 3?
Yeah, I mean, it's all just going to come down to compute power and the ability for companies to manage that trade-off between what their GPU costs are in the cloud and what sort of results they're going to get. And I think, this is what the market's very excited about with Blackwell, is that Blackwell is supposed to actually significantly reduce the cost, particularly on the energy side, and enhance the compute. So it means that potentially more AI applications could come into production, or it would give actually the development teams more time to actually work on the domain, to actually get them into production. It gives them more time to iterate, to make mistakes and learn from them and, kind of tweak the application to make it actually effective. Right now, it's too difficult to do that. It's way too expensive.
Thank you so much for joining us with your analysis. Melissa Otto with us, head of TMT Research, S&P Global Visible Alpha. Just one of the points around the trading of Nvidia, it was the retail investors that have been buying recently on the dip. It's not necessarily been the institutions. To me, this has been such an exciting stock because of the huge gains we've seen in recent years. But I now wonder whether it's one of the most dangerous stocks for retail investors because it's incredibly complex. We're trying to unpick what the cycle looks like. What is the cycle from here for the company? And retail investors are just buying because they think that it went up previously. We don't know what it looks like from here because I think there are so many moving pieces around competition and even tariff threats as well.
Yeah, absolutely. We've got to move on. As I mentioned, I think we've got another 11 guests on the show, of which most of them inhabit the C-suite. So we'll move on. Great analysis, Karen. You can find out more on Nvidia's results on CNBC.com. Evelyn Chang's done a great piece on the website as well. Well, President Trump says the US is planning a 25% tariff targeting, quote, cars and all other things. From the European Union. Speaking to reporters at his first cabinet meeting, Mr. Trump said an announcement would be made soon, but did not provide further details. The European Commission said it would react firmly and immediately to unjustified tariff barriers. Mr. Trump dismissed the bloc's ability to retaliate.
All countries, frankly, all different, but the European Union's it was formed in order to screw the United States. I mean, look, let's be honest. The European Union was formed in order to screw the United States. That's the purpose of it. And they've done a good job of it, but now I'm president.
What will happen if these countries or the EU retaliate?
They can't. I mean, they can try, but they can't.
Coming up on the show, the world's largest brick maker posts full-year results. We'll take a look closer at Wienerberger's numbers after the break. Plus, US President Donald Trump threatens a 25% tariff on imports from the EU. We'll have more later this hour. And earnings season continues here on CNBC. We'll be speaking to the CEO of LSEG, David Schwimmer. That is coming up at 7 GMT.
BP has cut its green energy spend by 70% and ramped up oil and gas spending by a fifth, up to $10 billion a year. The CEO, Murray Auchincloss, said the company had been overly optimistic in its drive to shift more aggressively than its competitors towards renewables. The point being, of course, Murray Auchincloss has been at the company the whole time that's happened. So the faith of a newfound religion from him, or the old-found religion, so to speak. Anyway, more aggressively than its competitors towards renewables. It comes as the energy giant is under increasing pressure from activist investor Elliott and others, which has built up a 5% stake to put full emphasis back into hydrocarbons. Interesting. Austrian building materials group Wienerberger has posted a 6% increase in full-year revenues to 4.5 billion euros, despite facing a challenging market environment. However, the company's profitability took a hit, with operating EBITDA falling by 6% to 760 million euros amid financing costs and restructuring expenses. It is a tough market out there, but if you want a barometer of whether Europe's building again, who better to ask than Heimo Scheuch, who is the CEO of Wienerberger. Heimo, lovely to see you, sir. Thank you very much indeed for joining us. Karen and I have had the pleasure of speaking to you for many, many years about the price of bricks and the price of construction materials. Now, how sits the world for you?
The world sits fine. It's a challenging world out there. It's a challenging world for you guys in the news and for us also in business. And things are changing, and that's actually good. It's good because we all need to deal with a changing environment, a changing world around, changing politics. That's our life.
Yeah, and there is a feeling that come off the crisis, Europe will respond. It will respond with defence spending, infrastructure spending, building data centres, rebuilding crumbling infrastructure in parts as well. That has to have an effect on a Wienerberger.
Absolutely, and I think it's good that we Europeans, and sorry if I count you English with us.
I am actually European.
Thank you very much indeed.
Karen, on the other hand,
and the Aussies too. Hey, just put us in there as well.
That's right. No, I would try to say we needed a wake-up call. Yeah. And this wake-up call has been a tough one for all of us, but we now need action. And we were talking about housing, we were talking about infrastructure. A lot of things have to happen, and we need to get this done. And obviously, we are in the right spot as Wienerberger, being in the housing, renovation, and in the infrastructure bit.
Europe is playing a huge role when it comes to geopolitics, and I can see a lot of that in the numbers today. For instance, the one-off decline in reported profit here due to non-recurring negative effects to sale of Russian business. As we talk about still detangling from Russia, there are conversations afoot about a resolution in the war in Ukraine. If that is the case, where does it leave the sale of all of these Russian businesses from European corporates?
Well, you see, we moved rather quickly, to be honest. We decided at the beginning, and we had discussions with our international shareholders, and they supported us in moving out of Russia. So we did that. Obviously, you have then a time lag between this action and then obviously the recycling of all these losses that you make when you move out of a country. Actually, we made a little gain when we sold the business, but due to accounting issues, you have to recycle this Russian exposure.
But if peace were to be achieved, would that change your mindset, and how quickly would that change your mindset on doing business in Russia?
I think this will take its time, because obviously when there are discussions to normalize relationships between us Europeans or the Americans and the Russians, it will take time that business can be built together again.
You've also cited the reconstruction in Ukraine, that you're ready for that. What do you want to hear from any peace agreement to give you some sort of comfort that you have security of operation there? Because we know there's a conversation around rare earths without potentially a security guarantee. That's all hazy at this stage. What do you want to see out of any agreement with Washington and Ukraine at this point?
I think, first of all, let's put the geopolitical side aside and this deal making on the political level. We are business guys. We need two major things. That's stability in a country. Stability means that you have a legal framework that you can operate in. And that means that when you invest somewhere, you are sure that you're the owner, that you get supply in the right way, and that you can run a compliance business model where you comply to international standards. And this, after the war and what Ukraine went through, will need some time. There will be early movers that make money out of it, trading businesses and others. You can also sell products, what we will be doing in the first place, but then moving into the Ukraine, running businesses there will be a second phase.
Jaime, Trump thinks the EU was formed to screw the US. I, as a student of history, beg to differ. Others beg to differ, but we'll just park that comment as well. Will Trump try to screw the EU in terms of getting American companies to lead the reconstruction rather than European companies? Does that present a real threat to the likes of Wienerberger actually being an active and profitable part of that reconstruction?
I'm a little surprised about our reaction in Europe when he says things like that. Because actually, when we look at our American friends, and I say friends deliberately.
Sure. I've worked for the Americans for a quarter of a century. I consider them friends.
They always have their interests in mind. They always had. And that's their right. And I mean, they work for America, they put America first, and that's their interest. We need to respect that. The only thing we need to do, and I had a short conversation with Ursula von der Leyen yesterday evening, before she left to India, and said, rebuild Ukraine means we need to do something in Europe. We Europeans, we need to push ourselves in the first place and do something. The thing is, we like to talk. You English and us Europeans, continental, we like to talk.
It's so
and
true.
We need to do something.
But you've just pricked our interest, and Karen and I were almost certainly going to ask the same question. What else did von der Leyen say to you that you can tell us?
Well, we were talking about the clean industrial deal, and I think it's a very good step forward. Less bureaucracy, that was my major issue, because we need investments. We need to have access to cheaper energy, obviously, and sustainable energy available in Europe. So these were the major subjects, and she was very positive there. And I reckon that she has a very tough job right now.
What we heard from a lot of commissioners recently was that they keep the goals, take away the prescriptive nature of how you get to the goals. Is that what you're hearing? And if so, what does it mean in the context of doing business for you?
It means for me that we have less bureaucracy, to be honest, less reporting that we need, because it's useless to do all of this, because it's common sense, actually. If we, as companies, and especially stock-listed companies, have a sustainability program, then we do it for a long term and we invest a lot of money. We don't need to report on everything.
And let me ask you a little bit about the macro, because in the numbers I could see that interest rates were still a source of pain over last year, and some of the uncertainty that we've been talking about. Interest rates are coming down in Europe, and we're seeing in the United States potentially now there are growth fears as well. Interest rates may be tackled by the Federal Reserve. Would lower interest rates make a difference to the business?
Absolutely. When you were referring to the United States, interest rates are fairly high, and especially for new house owners and people who want to get into the market, it's too high. We need lower interest rates to actually revive the housing market in the US. And I'm sure that our American friends and the administration will work on that in the future, because it's very important for the American economy. And on your words on Europe, I think we need still some steps when it comes to cuts of interest to revive the housing market.
Final question, and I'm going to show Jaime a video while I'm asking the question. I'm not going to show the viewers. Look at this. I think I've got the best bricklayer in the south of England. He's doing some beautiful curves on the outside, and he's just...
Lovely.
Look at those. It's lovely work.
It's very lovely.
Yeah, it's very muddy out there.
And by the way, it will last for centuries.
I know. My point being, is he charging me the right price for the bricks? Because we always like talking about the price of bricks. This is the basic question that everyone in Europe who wants to do any homework or infrastructure body wants to know. Tell me about the price of bricks.
The price of bricks didn't move that much, actually, when you talk about the price of other things in life.
Well, you famously on this channel compared it to a bag of potatoes.
I did, and I still do. We are still...
Are we cheaper or the same price?
If you buy it around here in the corner, we're still cheaper with the brick.
There's no tariffs there around the potatoes. There could be tariffs around the bricks.
Who knows?
Right?
No.
I'll tell you what.
Actually, the good thing is we produce locally, we sell locally, and I think this is very important.
All right, well, I'll go back to my brickie and tell him that Heimo Scheuch says he's doing A, a good job, and B, he's not overcharging me. Heimo, lovely to see you, sir.
Thank you very much.
Thank you so much for all your commentary as well. Heimo Scheuch, who is the CEO of Wienerberger.
Thank you for listening to Squawk Box Europe Express.
For more market-moving news, you can head to cnbc.com.
Or join us again on the show with Steve Sedgwick, Karen Cho, and myself, Arabile Kumete, weekdays on CNBC.